Good day everyone, welcome back to my channel, hope you are doing well. In today's video we are going to look at a simple strategy you can follow on boom and crash with a lot of backtest and testing it myself as well. I found success in it as well. Not every trade is going to be a winning trade, but majority of the trades is a winning trade, so it's your work to go backtest this for yourself before you try it. So alright, let's get straight into the video. So in today's strategy there's a few rules that we are going to follow. We're going to wait for a higher time frame POI to be entered. So we enter on a higher time frame point of interest, that's POI. This will be an order block or fair value gap. As soon as price enters the order block or the fair value gap on the higher time frame, you go down to the lower time frame and wait for liquidity to be taken. You wait for a break with the body of the candle that took the liquidity out. So in other words, the candle that took the liquidity out needs to close above the liquidity, not weaken it needs to close above the liquidity. Then we wait for a bullish or bearing engulfing candle, depends on which side you are in the market. If you are in a bullish trend, you wait for a bullish engulfing. If you're in a bearish trend, you wait for a bearish engulfing. And then we enter on the close or enter from the 50% level. So you either enter on the close of the engulfing, or you can wait for price to retrace. Price might not always retrace, so you might have a little bit fewer trades, but it's a little bit more extra confirmation. So I will show you on this board that I created as well with some examples. So let's get straight into it. All right, so what we look for is if this is the price on the higher time frame, you are going to wait for price to do its thing, and you are going to wait for price to enter a higher time frame fair value gap or order block. So in this case, let's say for example this is the 4 hour, so price is making a downward move, liquidity is created, we see there's a fair value gap created, so we are waiting for price to break this liquidity, enter our fair value gap or order block on the higher time frame, and then we are going to jump into the lower time frame for the formation that we just saw in the first slide, where we need to follow all the rules. So let's just recap. Higher time frame, fair value gap, order block, price needs to enter, and then we go to the lower time frame to find our entry. All right, so on the lower time frame, if this is our higher time frame, like we said, we are going to wait for this formation, this red arrows here. We're going to wait for this formation to form on the lower time frame. So on the lower time frame, wait for this information to form and enter on the close of the candle or 50% of the retracement. All right, so let's look at some chart examples that I can show you what I mean, and you can go test this for yourself. All right, so the first pair we're going to look at is Boom 1000. So let's just drag this here. So if this was the market in Boom 1000, you see it created higher lows, higher highs, higher lows, higher highs. So we know we are in a bullish trend. So now you can see I circled out this order block here. This gray box is an order block. It's the higher time frame POI on the 4 hour. So price created this order block, went up. Now we're waiting for price to tap into our order block. Now, as you can see, there's liquidity created right there, that candle there, that candle there. So before price literally tapped into our order block, this liquidity line was created here to tap into our 4 hour order block. And as you can see, there's a nice fair value gap there as well. So price came in, it tapped our order block. Now we go to the lower time frame to see where we can find our entries. This is on the 1 hour. It's basically this from the 4 hour. So we tapped into our order block. Now we jump to the 1 hour. As you can see, this is the 4 hour order block. Price went up, came down, got a little bit of a retracement, came down. Now inside our order block, what can we see? There's a fair value gap that's created. So here it's where you need to look closely for your entry. As you can see, there's liquidity that has been created there. You see that's the line that I draw out there. Liquidity has been created. Now we need to wait for a bearish candle to close below this liquidity. Does this one close? No. This one doesn't close. But you see this bearish candle closes below this liquidity, and it tapped into a 1 hour fair value gap inside our 4 hour order block. So it closed below it. So now we need to wait for a bearish candle to form and engulf the candle that broke the liquidity. Did that candle engulf this candle? No. Did this candle break and engulf the candle that broke the liquidity? Yes, it did. So now you can enter right there at the top of the close of this candle, or you can wait for a retracement to at least a 50% and enter there for extra confirmation. Sometimes the price won't retrace into your 50%. So that's why I'm saying as soon as this candle engulfs the one that broke the liquidity, you can enter right there, and you're going to put your stop loss below this low where the fair value gap has been created. So as you can see, liquidity has been taken, bullish close, and then you enter. So yeah, I just summarized it. We drop down to the 1 hour. Fair value gap has been created inside the 4 hour order block. Liquidity has been taken out and closed with a bearish candle. That's that candle there. Followed by a bullish candle and breaking the high of the bearish candle with a close. It's that candle I'm talking about there. And enter on the close. So if you entered here, you had a little bit of a drawdown. Remember, your stop loss is down here. So your stop losses are safe. You already took the liquidity inside the 4 hour. If you combine it with all the other strategies that I teach on this channel, you will notice as well, we entered a POI, liquidity has been taken, we had a market structure shift, then you can wait for the retracement, or for now, as this extra confirmation, you can just enter there. You will see when you backtest, not all the trades is going to work out, but you also need to watch out for example, it needs to break. This candle needs to close. If you're going to enter on an engulfing, but this candle only closed with a wick, your trade will probably fail. You need to wait for that close. Again, so let's have a look at this example. Yeah, price went up. There's a fair value gap created there. Liquidity has been created there. This candle broke the liquidity and it closed. And as you can see, this candle engulfed this candle, and you can enter on the close of this candle. In an example like this, price never came to retrace, so you enter from there and price went up. All right. Same with this one. Order block was created, price came down. Liquidity, if you go on the lower time frame, you'll see liquidity there has been broken. That candle didn't engulf, that candle didn't engulf, that one didn't engulf, but this one engulfed the candle that broke the liquidity. Price went up and you could have entered, and price keeps continue going up. So this is what I'm looking for. All right, so let's just have another look at another example. Crash 1000. All right, so in this example, let's say we're on the 4 hour again. As you can see, price did everything. We are reading price now. We are looking for entries. Price created an order block. What's just beneath the order block? Liquidity that has been created. So before we enter from this order block, liquidity needs to be taken out. Now look what happens here. Does this candle break the liquidity with a wick or a body? Only a wick. So this, you see, it engulfed this candle, but it won't be a valid trade. You'll get stopped out. This candle, in the other hand, broke that liquidity with a close, tapped into our order block. Now, did this candle engulf this candle? No. Did this candle engulf this candle? Yes. It engulfed the candle that broke the liquidity with a close. This one came down. So you could have entered right there and price went down. Or you can wait for the 50% retracement, enter from your 50, and then price goes down again. So let's quickly look at this example on the lower time frame. All right, so as you can see, this is the lower time frame of this price chart here. So liquidity has been taken. We had this big engulfing candle. That's that candle there. We had this big one. So you could have entered right there at this low here. You could have entered right there. Price had a little bit retracement and then we went back down. But like I said, if you want to be a little bit more conservative, if you don't want to enter on this close, on that close there, then you can wait for price to retrace. In this case, this was a beautiful trade. When price retraced to the 50%, what did the market give us? A fair value gap at the 50% of this 4-hour engulfing candle. The price went up, entered our fair value gap. As you can see, if you followed the other rules as well, for extra confirmation, liquidity has been taken, enter the POI, market structure shift, came up, enter our fair value gap. So the market structure shift you will see on the lower time frame that's created there. You won't see it on this one. On the lower time frame, you will see there was a market structure shift, went up into our 1 hour fair value gap, could enter your trade, and you had a beautiful push down. So this is a strategy that I've been testing out for a little while now. It works. This is just there's a lot of things you can look at for extra confirmation as well. If you combine it with the other strategies that I share on this channel, the strategy can go into a little bit more detail. But for first, let me just show you the basic one, and it works. You can go test it yourself. And then yes, if you like videos like this, if you want me to share this with you, please let me know. And then yes, I will see you guys in the next video. I hope you enjoyed this video, and then I'll see you in the next one.